our first speaker for the day. It gives me great pleasure to introduce Marcus Swanepoel of Bitex, who is a very, very early adopter and one of the first people who was actually active from a commercial perspective in this field. So please put your hands together and welcome Marcus Swanepoel.
Okay, maybe while they're sorting this out, thanks Ian for the introduction. I'm very excited to be able to talk today at this Bitcoin Africa conference. Unfortunately, I wasn't here last year, but from what I understand and from what I can see, Sonia and her team have done an excellent job in terms of raising the bar, in terms of the quality of the conference, the quality of the speakers, the participants. So that's very encouraging, and not just generally speaking for Bitcoin and blockchain, but also in particular for the South African context, because I think there's a lot of things in South Africa that we can be very excited about what this industry can do in terms of application, some of the infrastructure we have in place with existing banking systems and the regulators. And I'll touch a bit more on that when we go through this presentation. Good? Okay. So if I see this, okay, I'm gonna use quite a lot of slides in this presentation because I think there's a lot of stuff that's easier to represent visually. As Ian said earlier, some of it can get a bit complicated and a bit all over the place. So I've tried to summarize some of it on things that make sense visually. And today we're going to talk about the banks of the future and how cryptocurrency specifically will help shape the next generation of financial services. Before we delve into it, I just thought I'll do a quick little introduction to Bitex. So this presentation is obviously not about Bitex, but I think it's good for context. I'm very privileged to work with this team of exceptionally talented individuals. The Bitex team based out of Singapore and Cape Town. By the end of the quarter, we'll be about 30 people, and we've worked for some of those companies, Google, PayPal, Morgan Stanley, Standard Chartered, a lot of banks and tech companies. And of course, with the support of some phenomenal investors, most of you will know Naspers, who's arguably the most prolific emerging market technology investor. Ventura is one of the leading funds in Southeast Asia, and the Digital Currency Group, which is also the most prolific digital currency investor in the world, and a lot of the DCG portfolio companies are also representing here today, which is quite exciting. So, due to our backgrounds in finance and in tech and the type of work we do, and because of our investors, we spend a lot of time thinking what the banks of the future are going to look like. And let's maybe park Bitcoin and cryptocurrency to the side for a moment. That we don't sometimes even consider that, right? I just came from a trip in the UK where I spent a lot of time with all the top fintech VCs, all the challenger banks, all the top remittance companies, just trying to understand, how is this playing out, what's happening in this space, what's going to happen. And I just want to share some of that feedback with you guys about what the future of finance probably is going to look like, and also the role that cryptocurrency is going to play. Now you'll see I started off by putting a line through banks, and it's not because I don't like banks. I actually do like banks, and I use them, and I find them very convenient at the moment. But the broader point here is that the banks that we see today and the banks that we will see tomorrow is going to be very, very different beasts. And it's important for us to realize that up front. So let's go through some of these topics. First of all, frictionless money, right? And what do we mean by the future having frictionless money? Well, when you look at communication on the internet, Skyping someone, sending email, it's fast, free, easy to access, easy to use. And money, for some reason, doesn't work like that, right? It's kind of preposterous to think if I want to send money to someone in Nairobi, or if I want to, send money to someone in another country or do a transaction online quickly, it's really quite difficult. It's expensive. I can't just open a bank account anywhere within seconds. And if you look at the technology trends in any other field of communication and media consumption and so on, you will see a gravitation towards this instant service, free service, and so on. So we believe money will end up being like that at all. I don't think the question is, will it be like that? I think everyone agrees it will be like that. It's more, how do we get there? And so at the moment, there are a lot of companies that are trying to achieve this, okay? And some of them are quite famous companies, PayPal, TransferWise, Venmo. And they're trying to make money more transparent, a little bit cheaper, a little bit faster. But when we look at what they do, we would argue that the impact that they have is actually quite marginal, right? It's a little bit better, it's a nicer user interface, but in the bigger scheme of things, it's actually not that big. And if you look at the size of the banking industry and the finance, these guys are really, really just a speck in the, a drop in the ocean compared to, the broader financial services. So to move to a world where money is frictionless, I think we need to think about things a little bit differently, and it will require a paradigm shift, not a new business model, a complete paradigm shift. And for us, that paradigm shift will have to include a global protocol of money transfer, or it could even be a global currency. It could be either or. It is very likely going to be decentralized. And the reason why we say this is because if you look at the growth of the internet, which was an open, decentralized system, one of the reasons it grew so fast and it became so useful is because it was open. And we'll talk about some of this in some of the upcoming slides. And it will be optimized for the internet, which is kind of an obvious one given how people are transacting over the internet and how globally connected the world is coming. So when you start looking at this kind of broad level criteria, you start realizing that something like a cryptocurrency or something like Bitcoin does actually make a lot of sense. Now, I just want to, I say it makes a lot of sense, and I know sometimes people look, speak to us and they go, oh, okay, but really it's like a bit of a crazy idea, like some global currency or global payment protocol, that, how can something like this happen? So I thought, let's just maybe quickly look at the history of money. Now, the history of money is very complicated and it's very controversial as well. So I'm oversimplifying a lot here. And so if you're a historian or academic, I know there's some academics here, don't get angry. So I'm putting a big caveat in there. But basically, if you look at how people used, seashells, moving on to gold coins, moving on to paper money, then onto computers and digital money, this was predominantly driven by two things: consumer needs and the available technology. So the consumer need has always been cheaper, faster, better, more transparent, right? And that's why we spoke earlier, I mentioned that we've seen these trends across all the other industries, this consumer need driving that change. But the crossover to the new paradigms can only happen if there's technology available to do it. So I could only go from gold coins to paper money if there's a way to secure the paper money, to watermark it, to put serial numbers on it to make sure it can't be faked. Or I can only go to paper money for paper money to computers. Well, if there's computers in the first place and there's a way to secure the money and so on. So when you look at the technology breakthroughs that we've seen with Bitcoin specifically and blockchain more broadly, it allows you to transact on a peer-to-peer basis online for the first time. So all of a sudden, you have enabled that technology that allows the consumer needs to move into that next paradigm shift. And if you look at that kind of trend of global the change of global money, then the idea of a global decentralized cryptocurrency or something like that feels more like a natural evolution of money. It doesn't feel like a weird new thing or a crazy thing. It's just evolution, right? And we just happen to be sitting right in the middle of it. Now, I just wanted to point something else out also because I think it's an important point to make, is that the ultimate aim is to make money frictionless, right? It's not about Bitcoin. It's not about blockchain. At the end of the day, it's about bringing the consumer something that makes it easy to use money and cheap and free to use money. And if you, and as I say that the technology is just a means to an end, right? It could be Bitcoin, it could be blockchain, it doesn't matter. And there's some Bitcoin companies already, if you look at some of the companies I put on their circle, if you look at their marketing materials, they talk about instant and free money. There's Abra, global, instant, secure, no transfer fees. Zappo, welcome to digital money. And even Bitix, some of the stuff we do in the videos we do is about easy money, easy to use, free to use. And these are all Bitcoin companies, but they're articulating their client value proposition in terms of frictionless money, right? And it's not because they're scared to use the word Bitcoin, because I know a lot of people are. It's just because that is ultimately what the goal is. So let's quickly talk about the second thing about what these banks might look like, open systems. Now there's also a lot of theory behind this, and I'm not going to go into there's a lot of well-documented things around why do open systems often beat closed systems. And I think the best example is the internet. There was a lot of intranets being built by some of the larger companies like Microsoft and AOL, and then there was this open protocol, the internet, and because of something called permissionless innovation, the fact that anyone can use it, innovate on it, it grew really fast. There's a lot of network effects. We'll talk about some of those things. But open systems typically grow a lot faster, and we believe that the banks of the future are also going to be built on open systems, just like all the other technologies. Now, if we look at the open systems today, or in particular open financial systems, once again, there are some attempts at opening up the systems. There's a few other ones that I've left out that are a bit more high level. I've just simplified a little bit here, but the first attempt currently is around interoperability. So you have MoneyGram making a deal with Safaricom that now you can send money between those two. But that took years to pull off. There's a lot of negotiation. It's not a very slow and cumbersome. There's a lot of examples like that. And then open APIs, right? So there's a push towards open API standards, especially in the EU and the UK, and a lot of other governments that we deal with are also trying to push their banks to open APIs. But once again, when you look at these initiatives and at the pace that they're moving and the type of, what they allow, the impact is still marginal, right? A couple of open APIs, a couple of interoperability, it's not really changing anything. So once again, if we want to look at truly open financial system, we have to consider a paradigm shift again. And the paradigm shift here is looking at an open money protocol, right? Not companies opening up their APIs, but the actual protocol, the actual currency or the payment mechanism being open itself. And the implication of this is quite profound, and I've touched on it, and that is this idea of permissionless innovation. People can innovate. People can use it in any way they feel they want to use it. Okay? And then because of that, you also get something called total interoperability, right? The moment you build an open protocol, everything can operate with anything else. So I want to just give a visual example of that, because I find that I often talk about it or I say it, but people, I don't think the weight of the argument comes through unless you realize what the impact of this is. So let's take an example here, just any Bitcoin wallet. So I've taken the BitX wallet here. Now this wallet was launched, let's say, roughly about 15 to 18 months ago. And already it can be used at over 150,000 merchants globally. And some of them are put there. Now just bear in mind, this is a small product done by a couple of people, and our merchant acquisition cost for those 150,000 merchants was 0, right? That merchant base is growing rapidly. If we stand at the same conference next year, in 12 months' time, that might be 1 million merchants. That's very, very powerful. Like that a small team of people in Singapore and Cape Town can build a product that can have acceptance at so many places in such a quick time. Now the even more exciting thing is it's not just about BitX, but we are also interoperable with Coinbase's wallet, right? We can send money between us and Coinbase. We don't have to have an agreement with them. We don't need to trust them. People can move money between those two. And of course, you can take it to Uphold. That's another Bitcoin company. And any Bitcoin company, it's interoperable. And of course, all of these wallets are still interoperable with these merchants, right? And when you start looking at this ecosystem being built of interoperability, you can see why this industry is moving so fast and why adoption is growing so quickly. Because there's massive network effects that get incorporated on this. Something else just worth mentioning, because we're already building on an open money protocol, all of these companies, or most of these companies, are from day one building everything open, right? So a lot of us have APIs on our platforms where people can build their own applications on top of BitX, on top of Coinbase, on top of Uphold. And people build their own businesses and apps on top of that. And those apps are in many ways, not always, but in most cases, also totally interoperable with all the other ones and with the merchants and so on. So you see this massive network effects and growth. And about 12 or 18 months ago, a lot of this wasn't even there. So, okay, now, sorry, this thing is just falling off a bit. Okay, so typically, when I've talked about Bitcoin a lot and interoperability and cryptocurrency, now people start saying, okay, whoa. Okay, we don't like this Bitcoin thing. We kind of over Bitcoin. We've moved on. We're on blockchain now. Isn't blockchain really going to be the thing that's going to, what you show us, make it even better, right? Now, this is a presentation in itself, probably quite a long one. So I'm not going to go into too much detail, but I just want to give you guys a little bit of context around this Bitcoin and blockchain argument, right? And once again, oversimplifying it slightly, just in the interest of time. But just for context, before we started BitX, we actually in 2013, for those of you who don't know, we were a company called Switchless. And we built the first internal pilot, fully integrated internal pilot for a major bank, which happened to be a South African bank. It was never launched by the bank, but we showed this. This is me and Timothy, one of our co-founders in London, early 2014 at Finovate, where we showed what we built to the world. And based on this, we then went out. A lot of banks all over the world wanted to know about Bitcoin, blockchain, and so on. And remember, this is 2013 going into 2014. So we spent a lot of time with a lot of banks, Australia, Southeast Asia, Europe, US, all the big banks. And we spent a lot of time talking about Bitcoin, blockchain strategies, Ethereum, color coins, all kinds of technologies. How can we use this technology to apply to your business problems and for you to take advantage of that? And through this experience, we noticed a couple of things. The one was that the banks were going to be very slow to move in this space, right? They'll pilot, they'll try, whatever, but it's going to take many years before they actually launch products. And the other thing is there were some very strong misconceptions about these technologies and what they can do and what they can solve and when is it useful, when is it not useful. So, what we then did is we documented this in a paper called Beyond the Blockchain. very, very long. So I want to recommend that you read it, but you need like a weekend or a holiday or something. But it's published on my LinkedIn profile and on Medium, and you can find it there. But I suggest you read, if you're a financial institution and you're interested in Bitcoin and blockchain, I suggest you read it. And it's basically in two parts. The first part deals with what do you need to know to understand blockchain properly. So it links to all the best resources across the internet of all the experts in blockchain. And if you read those things, you will know more about blockchain than anyone else. Because it's important, because a lot of people know it at a very superficial level. And with these things, the devil is always in the details, right? So you have to go just at one level, a little bit deeper. The second part of the paper talks about our views on it. So now that you've kind of had time to form your own view, our view is that the financial applications for blockchain is very, very limited, if not non-existent, right? And that the best use case of blockchain technology in the financial services industry is probably still a cryptocurrency like Bitcoin. And I'm not going to go, I mean, it's, once again, long argument. What it basically comes down to is two things, right? Typically, blockchain stuff is around closed systems, not open systems, which means there's no permissionless innovation, and it requires coordination, right? So when 4 banks come together and they say, or like 10 banks, say, oh, we want to build this thing on blockchain, they have to coordinate to all accept the same standard. And by doing that, it's really, really difficult to do, if not impossible to do, right? Someone said, actually, a leading CEO of a big financial institution in Europe, I was on a call with him last week, and he said to me, you know, blockchain is really just a standards discussion, right? And that's what it is, it's a standards discussion. And he said, we've seen standards discussions before with the banks. We know about this thing, we have a lot of lessons we've learned from it, and we know that it doesn't work, okay? So that's the one part of it. The other part is around counterparty risk. So when you, once again, oversimplifying, but when you typically look at something where they say it's on the blockchain, whether it's shares or, I don't know, some object or so on, what they say is that you have some digital representation of something else. And people, for some reason, still think that when you put it on the blockchain, the counterparty risk disappears. But it doesn't. You still have to trust that whoever party issued that thing onto the blockchain is still there, that asset is still there, and that it was committed to the database or the blockchain in the right way. And there's this misconception in the industry that people talk about blockchains being immutable and say, you know, it's so important that people can't tamper with this stuff. But people don't tamper with databases. Banks don't tamper with databases, right? This is a narrative that people are spinning. That's like a paranoia that people are spinning. It typically doesn't happen like that, right? The tampering happens when people commit things to the database. Or they put the wrong information, either fraudulently or on purpose, or maybe accidentally. That's where the issues happen. Right? So counterparty risk, with Bitcoin you don't have that type of counterparty risk. If you get a Bitcoin, it's a Bitcoin. Right? You know what it is, you can trade it somewhere. It's not related to some other asset or some other instrument. Anyway, so I don't want to be a party pooper, but think about this blockchain stuff. Have a read that article. Be very careful to fall into this blockchain hype, because it's a massive, massive hype. For financial services, there's other applications that are really interesting, non-financial, that you'll hear about today. Platforms like Ethereum doing decentralized apps that Simon's going to talk about. Vinny's going to talk about identity. All of those things, really, really interesting applications. But when you're talking about banking and money, just be very careful. Okay. User experience. Now this one is kind of an obvious one, that the banks of the future are going to have to have great user experiences. But I think this one is also often misunderstood. People typically think of user experience as usability. Oh, it's a nice app to use, it's pretty, it's easy, you know, it makes a lot of sense, and so on. But user experience is a lot more complicated than that. And, you know, there's things to consider, like, obviously, customer support, giving the user control of their own information or their own data, interoperability, privacy, transparency. There's all, I mean, the list, I'll probably fill like 10 slides with this. And the important point here is just that when the banks of the future think about how they're going to build it, the interesting thing is that if you build it on top of an open protocol like Bitcoin, there's a lot of things that are inherent in this protocol that actually supports a lot of these user experience things. So I'll give you some examples in terms of, let's say, usability, right? If I want to buy something online on Bitcoin, so Gift accepts Bitcoin, it's one of Vinny's companies. If I'm on a mobile phone and I want to make a payment, if I click on Pay with Bitcoin, it will open up whatever Bitcoin wallet I have on my phone, pre-fill the amount, and you can just tap and make the payment. Totally secure, fraud-free payment. Now, it might seem like a small thing, but it's a really big thing. If you look at emerging markets and how people are shopping on their mobile phones, you effectively are converting any online store to like an Amazon one-click or maybe a two-click, right? That's very, very powerful. It's a powerful user experience that is only there because Bitcoin allows that. It's built into the protocol. It's called the payment handler. So you get this really, really good user experience. If you look at control, I think there's a lot of movement in tech generally, and not just in finance, about giving users control of their own data, their own information. You can download everything that Google stores from you. You know, it's a trend. People want to feel more ownership, and I think banking is going to move that way as well. But in the financial world, it's done it at quite a superficial level. So when you look at what Bitcoin offers people that other things cannot, for example, if you use the blockchain.info wallet, there you can store your private keys or your Bitcoin on your own phone. That is true control. That is on your phone. No one can touch it. You can take it anywhere. You can move it anywhere. And so it's not a superficial level of, oh, you're in control, but actually we have all of it and you have to ask us, right? There's a second layer of that is where you can put it on a hardware device, for example. So you can take it offline and you can store it. And so once again, I mean, everyone might not want to do that, but at least the fact that the option is there shows that people actually have true control of their money. Interoperability we spoke about. Privacy is another important one. A couple of years ago, I don't think anyone would have cared about privacy. If you look at what's going on overseas now, especially in the US, privacy is becoming a lot more of an important thing. We see it a lot for cross-border e-commerce out of emerging markets. It's okay, you'll give your credit card details to a company in the country that you know, or maybe if it's Amazon, but if it's a company that you don't know in another country, you don't want to share your credit card details, right? So privacy is important. And I think people confuse in the Bitcoin world privacy with anonymity, right? Bitcoin's not anonymous, but it allows you, because we can see what people do and we can trace those transactions. You'll hear more about that later as well. But when you do the payment, it's just, you don't have to then share your personal information at that point of sale. And for a lot of people, that's very important, and it's becoming more and more important. And then, of course, transparency, right? And this is all the transactions, as you know, are reflected on the public blockchain, and you can see all those transactions, and this becomes very useful, and it's a true form of transparency as well. It's not a company that offers transparency. It's a real transparency, and it's a decentralized transparency, which is very important. So let's look at another trend, which I think is quite interesting of the banks of the future, and that's aggregated products, right? So this is a slide that I think a lot of you guys have seen at FinTech presentations. It's a bit messy, but in the middle you can see there's an online bank, and then all these arrows pointing at all the FinTech companies disrupting all the different parts of this online bank, right? So people say, oh, products are getting disaggregated, banks are getting disaggregated. People will use this app for their money transfers. People will use that app for their loans. In our view, this is just a temporary anomaly, right? The reason why this is happening is because the banks or the existing providers can't move fast enough to provide all those services equally well as those individual companies can. But they are starting to catch up. And at some point in the very near future, and I'll show you some examples of where it's already happening, people will probably get all their services in one place because that's how users choose to work with their financial products. I mean, we've seen it even with our own users. When we were just running exchanges and we didn't have a secure wallet, people will buy Bitcoin, and then we say, don't use this wallet, take it, store it in someone else's wallet. And people would just keep their money there even if it's not safe, because they couldn't be bothered to move it, right? You don't convert your rand to US dollar at Barclays and then say, oh, but I'm going to move it to HSBC because it's safer, right? You just kind of keep it in the same place, right? That's how it works. So if that is how people behave, then that is where the market will go. And we can see it already in this rebundling. One, in the full stack form, so this is like the UK challenger banks that are building full suite products with everything built into it, but they're building it just as good as all those individual products that we saw. And we're also seeing hybrid versions of it. So for example, I think number 26 is like a current account in Germany, and they've incorporated TransferWise so that you can then also use TransferWise. So they're aggregating these products, so one company might not control the entire user experience, but everything is still aggregated in any case. And of course, Bitcoin companies are also bundling. If you look, this is just a slide from the CoinDesk industry report, all the different Bitcoin companies. And in the middle, there's a category called Universal, which kind of do all the other things that you see around it, wallets, exchanges, and so on. And you're seeing trends of a lot of those guys on the outside part starting to move towards the Universal model or being swallowed up by the Universal model. So we see bundling in the Bitcoin space as well. And of course, in some slightly abstract sense, Bitcoin is also bundled in itself, right? Which is quite interesting, because if we're moving towards a world where everything is bundled, then why not use something, a protocol that is also native to this bundling concept. So Bitcoin can be used as a store of wealth. I mean, I wouldn't recommend necessarily people to do that, but people do use it for that. You can use it to send money. You can use it to buy things online. And this transparency of the blockchain and the data that comes from that potentially also opens up to building other products like insurance products, a lot of cross-sell products, loan products, and so on, that you need this data to be able to sell those products. So in that sense, Bitcoin is also bundled, which is quite interesting. Okay, so let's talk about custody. So banks, we believe, also are going to become what we call general custodians. So at the moment, you trust a bank to store your money, but we think that's going to change. The banks will be, or whatever this thing is, not a bank, but the financial future companies will store more than that. So an example would be identity, right? There'll be all kinds of new assets. Maybe you already trust a bank with your money. Why not trust it with your files, like a Dropbox? Why not trust it with your identity? And I think this is a huge opportunity for financial institutions because, for me, digital identity is still the holy grail of the internet. I think the opportunity for digital identity is bigger than the opportunity for cryptocurrency and Bitcoin. And everyone is trying to own that, right? Facebook, Google, and so on. But for me, that is not a natural place for that to reside. It needs to reside somewhere where you already trust the people and where their business model is around protection and security, not around advertising or so on. So I actually went onto the Airbnb website, and I was going to take a screenshot and then paste the bank logo in there. But then I saw actually you can sign up with Amex. I didn't realize this. So it shows that so that's actually on the Airbnb website. I didn't make that up. So you can see some financial institutions already moving into that space. Then not just new types of assets, but there will also be new types of owners of these assets, right? So that's a Tesla. And if you start looking at the Internet of Things and everything happening, how quickly the Internet of Things are growing, as objects start communicating more with each other, they also need to start transacting more with each other, which means that they might need to have a bank account or a wallet. And we've seen a lot of trends in the industry, for example, with 21 Inc. building computer chips that are going into devices so that these devices all have Bitcoin wallets and can transact with each other. So in the example of the Tesla, maybe the Tesla needs to draw some money from its owner, it needs to go to the station, fill itself up, it needs to pay for its toll road, maybe it needs to bid against another Tesla to get a parking space in the CBD. And so it will need someone to potentially be the bank for them, right? And this stuff is not like sci-fi stuff. This is already happening. If you go to California, for some of you that come from California, I mean, these cars are driving around and they're transacting with each other, and it's not sci-fi stuff, right? So banks will have to onboard non-humans. It will either be objects or autonomous corporations and so on. So we think that's a very, very important thing. Okay, the next couple of ones aren't so detailed, but I'm just going to skim through them quickly. Banks will have to provide global services, right? Traditionally, banks start in a country, they build up a reputation brand 10, 20 years, then they're going to acquire a bank in another country, then they mess it up, then they sell it again, or, sorry, that was a bad example. That wasn't on purpose. I was actually referring to something in Korea. But anyway, so the merger activity that you see in the banking industry is very different from how we see tech companies being built now, where it's built global from day one. So if you look at many companies, TransferWise, a lot of big fintech companies, globalize very quickly. And Bitcoin companies are actually global from day one as well. So if you go search for Bitcoin wallet on the Play Store, you can see a lot of companies, Zappo, Coinbase, Bitx, all of them, you can use those wallets in any country. So immediately when you launch a product, the whole world can use it. They might not be able to use all the features, but they can certainly use, your brand is exposed there. And it means you need to be able to engage with those people in terms of localization, language, funding methods, and so on. So, if you look at Coinbase already, Coinbase is only a couple of years old, and look at all the countries that they're already supporting in terms of currencies, localization, and so on. Same with Uphold, right? Different currencies, different languages. And also, there's the Bitx app in Indonesia, right? Already from day one, people in Indonesia can use our app. It is in Bahasa. We have customer support in Bahasa, right? And I was having a chat to a CEO of another bank the other day, and I said, it's interesting because one mustn't underestimate what benefits you get culturally for organization, building this stuff in from day one, right? It's very hard to build a company and then 10 years later try and do a different language, different currency, different type of people, user behavior. All of the companies being built now are from day one building a culture of being able to understand other cultures, other languages. You know your users in Malaysia behave very differently from you use in South Africa. Different devices, different times of the day, all of this stuff. And building this as a culture from day one is really, really important. And if you aren't able to do that, you will not be able to compete with the other banks of the future. Okay, smart regulation. I know there's a lot of workshops on, or sessions on regulation. So I won't say too much here, but regulation is a little bit of a tricky one because it's really important that we talk about it. And it is getting, it's getting quite challenging for banks, as we know, very expensive, a lot of red tape, all that stuff. And we believe that cryptocurrency is actually the solution to making it a lot easier. So if you look at the trends, new regulation that has been brought up in the USA that with license, the most encouraging aspect to take from that is that this new regulation, they didn't plonk Bitcoin under some other category, right? They made a new law governing it. And a lot of governments that we're talking to are thinking about it the same way. And the significance of this is that it allows people to rethink compliance from scratch, right? Let's maybe not just think about, okay, should it be a currency, should it be a commodity, but are we doing KYC in the right way? I'll show you some of the other stuff, just the, better KYC. Why don't we know already we can do KYC 100 times better using someone's social graph than using their ID and their proof of residence, but we're not allowed to because regulatory-wise you're not allowed to do it. So if there's a new law enacted for a new industry, why not try it out for the first time and allow people to do it like that? You also hear a lot about the tools that are available, much better tools to monitor for AML, money laundering, drug use, all that stuff over at a global scale. And also you get massive economies of scale from this, right? So at the moment, one of the key issues with the regulation is that all the banks, all law enforcement, all countries have to build their own tools. There's a lot of replication. But if there's one global system with tools that are being built, everyone can use the same tool. So it's going to be very cheap, probably free as well. And so those economies of scale is going to drive the cost of regulation down. It's going to be easier to regulate, it's going to be cheaper to regulate. Now, it's just not me being optimistic here, but I truly do believe this. Okay, embedded intelligence. I'm not going to spend too much time here, right? I think a lot of people know AI is important, intelligence built into financial products. For us, the categories here are, it's around personalized experiences, it's around contextual experiences, it's around predictive stuff, and also what we call optimal paths, so that your financial product might make financial decisions for you. If I send money, does it go through Bitcoin or TransferWise or Currency Cloud with a normal banking system? I shouldn't care as long as it's the optimal path. Okay, so that's where that will move. And then, of course, tech culture, I think, is something that is going to change a lot. So when I say tech culture, what I mean is, I don't know if those, maybe this is not the right audience to ask if you watch the show called Silicon Valley, but it's about a startup in Silicon Valley, and these are what your bankers are going to look like in future. Not even in future, this is already what a lot of your bankers look like, right? And when we say tech culture, what we mean is a culture of people being lean, running lean businesses, being very close to their customers, always iterating, right? There's a lot of being incentivized with equity for teams and people to build, these great customer experiences. So a lot of this tech culture, I think, is going to fall over into the banking, or spill over into the banking kind of side of things. And then the last one here, before we move on to the next bit, is that we believe it's going to be built from scratch, right? If you look at all these things that banks of the future are going to look like, the more we look at it, the more we think it's going to be really impossible to change an existing financial institution to behave like that, right? It's going to have to be built from scratch, to have that culture, to have that technology, to have all of that stuff into it. Now, some banks might acquire companies and do it that way and so on, but to get that outcome without building it from scratch is exceptionally hard. I'd say it's probably impossible. Okay, so as you've seen, we've spoken a little bit about the banks of the future generally, and I've showed you that we believe that Bitcoin specifically is going to be a critical enabler for a lot of these technologies. Now, I just want to talk just a couple of minutes quickly also, because normally also hear people like, okay, but really, Bitcoin? I mean, is it not dead? We heard it was dead like, last week and 3 weeks ago and so on. So I just want to show you a couple of things signs that we are seeing that we know that actually it's not dead and that it is moving very fast and that it will be a critical enabler, right? So this is a classic Gartner hype cycle, for those of you who haven't seen it, and starts off with the technology. These words are awful, by the way, but I didn't make them up. This is what Gartner made up. But technology trigger, peak of inflated expectations, profit delusion. But most technologies you can map, new technologies through this curve, or this adoption curve, right? Whether it's 3D printing, railroads, whale harpooning, I don't know, you can put anything on here. And if you, we believe Bitcoin has gone through this peak of inflated expectations and is already on the slope of enlightenment. And there's a lot of evidence to suggest to us that we're right. And even actually just as a matter of interest, if you plot the Bitcoin price on that, seems to, and use price as a proxy for interest in the technology, then it kind of roughly follows that curve as well. So there's a couple of what we call Bitcoin transition catalysts that we're seeing that I'm just going to quickly talk about. And I've categorized, seeing we had the Bitcoin Africa conference, I thought, okay, let me categorize it into like the big five. And then I'm going to assign a big five animal to each one of those categories. And they're not randomly assigned. I have to think very carefully about which animal gets, which section. So hopefully I got it right. So the first one, the buffalo, is regulation. All right, so the buffalo is slow, and he doesn't do much, but when he gets aggressive, he gets really, really aggressive, right? So some people might refer to that as overreaching, right? So we've spoken a bit about regulation. I don't want to talk too much about it, but we see a lot of encouraging signs on the regulatory front that it's moving forward, and it's not going to be an issue for Bitcoin or cryptocurrency globally. Reputation, the lion, I think that's kind of self-explanatory. The lion needs his reputation to be king, and if he loses that, then everything else, all else fails for him. I think this is the biggest challenge for Bitcoin, right? And once again, I don't want to spend too much time on this. We're releasing a really detailed blog next week on this, where we're going to talk about the reputational issues and what they are and how to address them. But I think the main takeaway is that there's still the perception of Bitcoin being used for drugs and ISIS and so on. It's very much driven by emotion, by the media and so on. We've sat with many regulators and we've started explaining to them, look, let's go into the data, let's go into the facts. And we start showing these facts, right? And we see, FATF saying, people don't use it for money laundering. UK Treasury, digital currencies pose lowest money laundering risk. Europol saying ISIS are not using Bitcoin. I mean, that was, by the way, a Fox News report. So probably you should have ignored it in the first place. And then all of these great companies that are building tools to track all this stuff, and as Jonathan might show you later, like if you look at the data, you realize the problem, of course there are risks with this, just like any other currency, but the risks are actually very small once you look at the data. I was thinking actually I should have changed, the left is like the Trump voters perception, and then the Clinton voters are on the reality side, right? So, okay, so the media is also starting to become more positive. If you feature Bitcoin on the cover of The Economist magazine, a lot of influencers putting their names behind Bitcoin. Richard Branson, Steve Wozniak, the founder of LinkedIn, Reid Hoffman. And don't underestimate how important this is to adoption and to people accepting the brand and so on. A lot of companies putting their weight behind it, either investing in it, accepting it, writing reports around it. So on the reputation front, we're very positive that things are moving in the right direction, and it's probably going to be okay. The technology is the elephant. That's like the big white elephant in the room that no one wants to talk about, and it's very close to the Bitcoin community. And this is typically around the block size debate. And in the interest of time, I'm going to also keep it a big white elephant, so we can talk about it later. But if you look at a lot of the other open source technologies and some of the growing pains they had to go through, Bitcoin is going through the same pains. We're quite confident that Bitcoin will survive that. Okay, blockchain is the white rhino because it's almost extinct. Everyone talks about it, but no one ever sees it, right? So I think that's quite apt. And as I gave some views, some of our views on blockchain technology. I'm not going to overemphasize the point. Just when you get to the end of that paper, if you happen to read it, one of our conclusions or a trend that we've seen, one of the trends that we see is people typically go through a phase where they discover Bitcoin. You go, oh, okay, Bitcoin, that's kind of interesting. Not so sure about it, a lot of risks. Is it being used for money laundering and so on? Then they discover the technology, and then they go, oh, okay, I understand this, but I'm only interested in blockchain, right? I just care about the technology aspect of it. And then we see people going into the third phase, which says, okay, Bitcoin, right? Now that I really understand it, now I understand that actually it's all about Bitcoin, not about blockchain. And we went through this, and I've said to some of the other days, well, trust me, all we're trying to build is a frictionless, universally accessible financial experience for consumers globally, right? How we get there, I don't care. We honestly believe Bitcoin is the best way to get there. If anyone can convince me that there's another technology to use to get to the same outcome faster, better, that's better for the consumer, then I will tomorrow use it. But it's not there, right? And just anecdotally, we can see already this trend happening with some of the banks. So some of the banks that we started working with really early, and these are, just for the record, not South African banks, in 2013, with Bitcoin, that went into the blockchain stuff, are now chatting to us and saying, yeah, they did this blockchain stuff, but it's not really working out so well, right? Should we look at Bitcoin again? But this is over beers and over lunches and stuff. They'll never say it publicly. It's not like a cool thing to say at the moment. So just bear that in mind, right? Okay, and then the Bitcoin killer app. This is the one, you must like, oh, but what's the killer app of Bitcoin? Why do people want to use it, right? And it's like asking me, what is the killer app of money, right? There's no killer app of money. People just use money. It's a means of exchange, right? So Bitcoin is the killer app, right? It's a better form of money. I think the better question would be, how do people move from the previous monetary system into the new paradigm of Bitcoin, right? And I'll explain to you how we think it's going to happen. It starts on the edges, right? If that's the market of people using money, there's all these niche use cases, people speculating on the price of Bitcoin, using it as a currency hedge, right? We see this, people in emerging markets, in other countries, when the currencies start tanking, people buy Bitcoin, right? Once again, I would not recommend anyone to do this, but people do it. Niche e-commerce. So for example, I bought something the other day. I live in Singapore, so I ordered something from, so the exchange control people know I didn't do something wrong, yeah? I ordered some Chrome boxes from the US, and they shipped it to a shipping company that was meant to ship it to me in Singapore, and then they blocked my credit card. I paid for it, and they said, no, there's some fraud risk here, we're not going to send it to you. So I have a fight a whole day with them on email, and I say, no, but come on, I need it, you need to send it to me. They said, you have to do an affidavit because we don't know it's your card, and blah, 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 blah. And at the end of the day, I go on their website again, and by chance, I see they accept Bitcoin. I'm like, no way, this can't be. I mean, it's like the biggest luck ever. I take my phone out, that payment handler, I just click over, and 2 minutes later, I get an email from them saying, thanks for the payment, the goods have shipped, right? Now, it's an edge case, I admit, but I had a credit card already, and I couldn't consume that transaction, right? So if you look in emerging markets, that's a massive problem. There's a lot of cross-border e-commerce happening, and a lot of people either don't have credit cards or their credit cards get outright rejected. So that's another niche, right? Microtransactions, sending to people money in certain circumstances. Maybe I'm not a big proponent of Bitcoin remittances for consumers, but there are reasons sometimes why you would want to do it. And so it starts off in these little niches, and that's also where Bitix, we're targeting users in those niches. And over time, it starts bleeding into the wider ecosystem, right? It starts in the cracks, and then it bleeds in. And this is not just my own hypotheses or theory of, this is disruption 101, guys. If you read, this Clayton Christensen's Innovator's Dilemma, I'm sure a lot of you have to read it at some point in your life. I'm just going to read the quote there. Disruptive technologies typically are first commercialized in emerging or insignificant markets. Leading firms' most profitable customers generally don't want, and indeed initially can't use products based on disruptive technologies, right? This is well documented stuff. It's like it's happening literally like it is out of a textbook, and we can see it. And then, of course, some companies actually try and build bridges to make it happen faster. So Zappo has a debit card, so you can use your Bitcoin in the interim anywhere, so that over time you can move faster into the Bitcoin world. And Bitix also has a virtual credit card that has the same thing that we're about to launch now. So the other thing is when we look at the data is also showing us that it's working, right? So please, important to look at data. We look at transactions growing, right? Bitcoin transactions are growing very fast. Merchant acceptance is growing, right? Everything in a positive direction. If you look at the Bitcoin as a kind of cryptocurrency, the market cap, it's really moving to the top, and this is because of all the network effects, right? If you asked me 2 years ago, what is going to be the cryptocurrency that's going to be the one that everyone would use, I would say probably not Bitcoin. That's kind of the test run, and it'll be something else that's better. But because of network effects, Bitcoin has now almost become the, for better or worse, the de facto, cryptocurrency, and we can see it in the numbers. Now, for some of you that are more mathematically inclined, you might look at some of these growth rates and you go, okay, but it's kind of linear. It doesn't look like it's growing very fast, right? And I just want to make a point here that be very, very careful of this deception of linear versus exponential growth, right? When you're standing on an exponential growth curve, it looks, when you look backward, like a linear curve. So you are there, and it actually might even look disappointing, but you're standing on top of the exponential curve, and that's where we're standing in terms of adoption like this, right? The same thing with email. When email started, no one was using email because no one else was using email. And then it hit some critical mass, and then those network effects kick in, right? Okay, I'm going to end off and just tell you a quick story about a cook and a chef. not my story, I'm retelling it for someone else. So maybe I wanted to show you this picture just before we start. Does anyone know who this is? Oh, okay, some people know. I felt a bit bad putting it on because the guy looks really, really sad. Okay? And he said, oh, we didn't do anything wrong, but somehow we lost. And it's the Nokia CEO after they sold to Microsoft. And they did do something very, very wrong. And it has to do with this concept of the cook and the chef. So I don't know how many of you read this. There's a blog called Wait But Why. And this guy writes a lot about new industry, space travel, all kinds of interesting stuff. And I mean, what's a conference in South Africa without mentioning Elon Musk? So one of his readers is Elon Musk. And Elon Musk so much enjoys his stuff, he invited him over to Tesla, to SpaceX, to talk about how they invent in the future. And spent quite a lot of time with him and came back and wrote this amazing thing called The Cook and the Chef, where he talks about how people like Elon Musk, Steve Jobs, all these kind of visionaries, how their brains work, and how are they able to predict the future better than other people, right? It's a very long thing, once again. Go download it, read it. It's probably, in terms of management theory, it's going to come out as one of the best things ever written for people to learn about themselves and about management and so on. But essentially what he says is, we mistake, the chef is now the Elon Musk or the Steve Jobs. We mistake the chef's clear view of the present for vision into the future, right? So what it means is that we all have a normal reality box where we see everything that we think is possible today, right? And Elon Musk, we think, has this magical reality box that says he can see everything that's going to be happening in the future, right? And that's why he can build SpaceX, he can do all of this stuff, because he can see into the future and we can't. But the reality of what's happening is that our box is really called the conventional wisdom box. Everything that we see is stuff that's actually possible from 10 to 50 years ago, right? And Elon Musk, all he has, he's got a normal reality box. He can just see very clearly things that are possible today. He can't see into the future. He can just see the present more clearer than we can see the present, right? And that's a very, very important point to take away. If you think about all the stuff that we're talking about now, about the banks of the future, it's not really in the future, guys. It's here. These are real examples of real companies. These things are already happening. So just to end up, I know, thanks for your time. It's been a really long session. I'm even out of breath from talking so much. But just to summarize, recap the final points. Finance is changing, and it's changing really fast. I think we all know that. Hopefully we've demonstrated that. Our assertion is that fintech and blockchain will be impactful, but it will actually be marginal in the bigger scheme of things. True disruption comes from paradigm shifts, right? It doesn't come from the inside out, it comes from the outside in. Bitcoin has huge momentum, and it's key to this paradigm shift, right? Don't ignore Bitcoin, because it's moving fast and it's coming at all of us. And the banks of the future are already here. Good, thank you.
Cool, Marcus, thank you very much. We're just going to take a few questions if you've got a little bit of breath left. We've got short time for questions. Hands right, far in. Thanks. Welcome, Elizabeth.
Great presentation, Marcus. Really awesome overview of everything. I just got off the plane from the Harvard Africa Business Conference, where Mr. Clay Christensen spoke about disruption, and it was the theme of the whole conference. And you had all these awesome African grad students, businesses, policymakers. A lot of my partners that I work with in Nigeria, Kenya, et cetera, were there, and they were like, yes, innovation, disruption. Then I came to my panel where I presented my company, which is also a Bitcoin company, and everybody was like, whoa, this is too disruptive. So, I mean, we talk a lot about disruption and innovation, and then we get down to it, people say, but I'm still confused, I don't really get it, or how would I even bring this in-house in my team? I'm used to owning everything. It's scary when I can't, or my team can't do it myself. So how do we get that disruption, et cetera, in-house without being so scared? So what can you recommend to big institutions or banks interested, knowing they need to disrupt to go forward? So how do they work with this new technology? How do they bring it and translate into new products?
It's a tricky one. I think the best thing we can do is just to ask people to keep an open mind about things, right? And that's a good example, right? Don't write something off because you don't understand it. Give it a chance. If you're going to look at new technologies as a company, look at the blockchain, but also look at Bitcoin. Look at the thing that scares you. You might not be able to build a business out of it on day one, but you need to be open-minded to it. I mean, I don't think there's much else to say other than that, right? In terms of how you implement it into your business and so on, I think that's quite tricky. But just keep an open mind and speak to everyone, right? And I guess form your own opinions on stuff. Don't listen to people that say, technology does this, or fintech does this. Go read up, figure out for yourself how it works. Do your arguments from first principles. I think that, but I had the same thing, Elizabeth. I was at a conference in Singapore. I did a big presentation in front of a bunch of fintech people, and then some guy was putting up his hand, and he was the presentation before me, and he said, "You guys aren't pushing the boundaries enough. You need to be more innovative. It needs to be bigger." Then I do my Bitcoin presentation. Then he goes, "No, you're crazy, man. You're crazy." So people it's just hard. Yeah.
Great. Thanks, Elizabeth. We got one more over there.
You touched on the scaling of Bitcoin.
Yes.
There's a big debate of the size of the block size is going from 1 meg to 2 meg. But Bitcoin can only do a handful of transactions a second. And it can go from 7 to 14 meg to 15 meg to 100. But we need to go to thousands. And it can't remain centralized, but decentralized.
Yeah.
And thousands of transactions at the same time. So how is your exponential curve actually going to...
I'm going to be very rude. I'm going to park this aside because this is a very technical. I think it's going to be hard for it to, in like 10 seconds, give you an answer to that. But what we can say is that it is capable of doing that. It's just it comes with trade-offs, right? And over time, you give some of these trade-offs off. It might be in terms of decentralization, in terms of security, and so on. But it's possible. It's just can you handle the trade-off, right? And that's why it's moving slow to make sure that we don't make the wrong trade-off. But we can talk about it afterwards. But it is a challenge. It's definitely something to think about.
Great. Right at the back, the blue shirt.
Thanks very much, Marcus. You've said Bitcoin is the way to go. The Bitcoin blockchain is the way to go for the future. And the Bitcoin blockchain works really well for Bitcoin. But what if you want to transact with something else? So you've spoken about making a frictionless or currency as a frictionless commodity around the world. But there are things that you may want to transact that are not Bitcoin. Do you see those as being put like kind of like a VPN on top of the Bitcoin network? Or do you see a role for other kinds of blockchains that are specifically built for non-Bitcoin instruments?
So maybe just to clarify, I'm not saying Bitcoin is the way to go. I'm just saying be mindful that Bitcoin is also part of this whole thing, and probably, in our view, it is most likely to be. I'm not saying it's 100% the one and only, right? But very likely. In terms of other blockchains, yes, I think, look, once again, it comes down to that, what is the problem you're trying to solve? If you're trying to solve a problem where a bunch of institutions that are already regulated financial institutions want to, for example, trade some kind of commodities or shares or currencies between each other, why do you want to use a blockchain, right? Well, just put on a database, just get together and build a Swift, right? It doesn't take away from the legitimacy of the problem. Yes, you want to make transactions faster, cheaper, and so on, but you might not need a blockchain to do it. That's all what I mentioned there. We probably will see some other types of blockchains, or I think the thing that excites me a bit more is the stuff that's kind of attached to the public blockchain, like side chains and stuff like that, where it is related to the Bitcoin blockchain, so you can take advantage of that security and that network effects, but it also has its own kind of capabilities that you can leverage. But just be mindful, is a blockchain the best way to do it? Because blockchains are slow and they're expensive to run, right? A database might be a lot better option to do it. And just be mindful of the counterparty risk as well, right? When you put money on the blockchain and you send it around, I don't know if whoever's standing behind it is good for the money, right? Or is good for the shares. Or, for example, in the ETF industry, when people invest in ETFs, what they don't know is a lot of ETF funds actually lend those shares out to hedge funds that short it, right? So you actually have counterparty risk against a hedge fund that you don't realize. So if you do the same thing with currencies or with shares and stuff, that actually, there's credit risk and counterparty risk that you're not aware of. And with Bitcoin, you don't have it, right? So I think there's things to think about, but yeah, just be mindful that, is blockchain the right way to do it? Are you solving the problem with the right tools? Because it's often not the right way to solve it.
Great. Thanks, Mark. Last question. Thank you.
Hi, Marcus. You mentioned the 3 phases, the Bitcoin and then the blockchain and the Bitcoin. Personally, I think I'm still at the blockchain phase. And that's primarily due to the fact that my understanding of it is that blockchain can do more than currency in terms of storing information and data. At what point is the Bitcoin phase? At what point do you get there, based on your experience with the banks that you mentioned earlier?
Okay, I think, and once again, everyone might not go through it, and there will be, I just want to clarify, there will be legitimate use case of blockchain, right? That you can actually use this stuff. I'm not saying the blockchain does not exist and you cannot do stuff on it, right? But for many applications, especially on money, you will find people going through that thing. And the time that you hit that reality is either when you figure out for yourself how this stuff works and not just listen to what other people say, right? So figure out why, when people say blockchain can do all this stuff, what does that mean, right? What does it really mean? Like if we, you know, and the other one is when you start testing stuff and in practice trying to do stuff, and you see, realizing that you're not getting the results that you trying to, you know, that you set out to be, right? So, you know, if there's so much money, so many clever people from banks, from tech companies, so much money going into it, how can not one person show us one financial use case that's totally compelling, where everyone wants to just use blockchain tomorrow? Do you not think it's a bit bizarre that this can't happen with all this money, all these people on top of it for years now? I mean, we've been working on this since 2013. And look, maybe we're wrong. So this stuff, I'm caveating it. I mean, it's a very controversial view that I'm giving you guys here, right? 9 out of 10 people will tell you, no, it's not Bitcoin, it's blockchain, right? So just to caveat that. And so just in our experience. And, you know, we could be wrong, but we spend a lot of time on this stuff, we look into a lot, and I suspect that we're not wrong. But you should figure out for yourself. That's the best way to do it.
Great, Marcus. That was fantastic. Thanks for stretching our brains. I just want to say that I've got first dibs on a head massage at tea time. So I'm going to need it. Secondly, the thing that really concerned me was my car having a wallet. I had visions of waking up in the morning, my Jeep sported itself a new set of bling tires. Yeah, great. Thank you, Marcus. Your one-man Bitcoin conference. We really appreciate it.